I've chosen this chapter, chapter 19. So it's all about digitalization in retail banking. Okay. Great. So as part of my agenda, are you able to see my screen?
Yes, we can see your screen.
Sorry. Okay, as part of my agenda, first I will be discussing introduction. I will be briefly discussing about digital transformation and banking industry, and then digital transformation and its difference with digitalization. Digitalization. Next, I will be talking about Payment Service Directive 2 or PSD2, types of PSD2, and the main services of PSD2. Then I will be discussing about the impact of PSD2 on digital transformation of banking industry. Next will be the risk and threats, and finally the conclusion part. Okay. Now, by definition, digital transformation, well, this is just a refresher since digital transformation has already been defined several times before in the previous presentations. So, just a refresher, digital transformation by definition is the adoption of digital technology by a company. So, common goals for its implementations are to improve efficiency, value, and innovation. Whereas digitalization is the process of converting analog information into digital form using something like analog to digital converters, such as image scanners, digital audio recordings. So, digital transformation, however, is broader than just the digitization of existing processes. So, digital transformation entails considering how products, processes, and organizations can be changed through the use of new digital technologies. So that's the main difference between digital transformation and digitalization. So digitalization is just focused on one process, just converting an analog information into a digital form. Whereas digital transformation is transforming the entire process of an organization by using new digital technologies. So that's the basic difference between the digital transformation and digitalization. Now, here is the overview of a typical bank or a traditional bank setup. Uh, we call this as the brick and mortar type of setup. So meaning the transactions are enclosed within the four walls of the banks. So as you can see here, people are queuing up for cash withdrawal or deposit for any transaction. Some people are talking to personal bankers for some queries. So this is just the overview of a traditional bank as we know it. Next will be the digital transformation now in the banking. Okay. In the banking industry, actually, digital transformation is, in terms of development, is quite, what do you call this? They take their own pace, meaning because banking industries in nature is very conservative industry and application of new technologies is relatively slow. So they take their own pace because the main factors here are trust and reliability because clients of these banks put their trust to them. So this is why banks usually adapt only technologies which are already tried and tested, and at the same time tried and tested over time, no? And at the same time they know already the risks involved are already known and already resolved. So the banks will not invest into some kind of new technology without knowing that this is already being used by other banks. So they don't want to be some kind of guinea pigs in terms of applying new technologies or new applications. So since banks are built on the trust of their clients, and if one of these financial institutions fails this trust significantly, then it puts that in danger the whole financial sector. So if you would remember, diba, for example, we hear news about BDO getting hacked or BPI getting hacked. The tendency of their clients normally would pull out all their funds, right? So I remember previously when I was in a bank also, um, whenever some news like this comes out, my clients also talk to me. So they ask me, "Oh, Jeff, how's your security in place in this bank? Is it because this bank was already hacked? Is your bank already safe?" So all other banks are also impacted if one of these financial institutions fails. So, meaning not just the victim bank or the bank which was hacked. So other banks will get also affected by this kind of um, um, what do you call this, danger or um, so anyway. So this digitalization in established banks not only represented by some radical change of their business models, no, or significant product innovations, which will call as digital transformation. So the main focus mainly of this bank's transformation is on their current business process into converting it into paperless processes. So the digital transformation is not that radical in terms of the changes. No, they just convert some paper into paperless environment. No? So but it doesn't mean that the documents are not necessary anymore. No, that they are just now in electronic form. So the same goes for retail services. So the direct contact with the client is only extended by internet banking. So that one does not have to go physically to the bank. So most of the things one can do remotely is just work that the clerk in the office would have to do. So the result of digitalization in banking so far is that the actual work now is which is done by the banks has been shifted now to the customers. So that's actually what happens, no, because of the internet banking. So the work done usually by the clerk in the banks is now transferred to us, the customers, because of this internet banking, because it's a self-service. But actually, this status quo of the banking industry may change due to the open banking initiative, which resulted in the Payment Services Directive 2. Okay, so what is PSD2 or Payment Services Directive 2? So these are third parties defined in the regulation which are allowed by client to step between the client and the client's banks and are able to mediate directly some of the bank's services, and the banks are required to provide them with APIs to be able to do so. So third parties, these third parties can be not only banks but also other institutions who has already acquired a license from the national regulator. So actually, this is very eagerly awaited by technological companies or the so-called fintechs. So fintechs actually not just the startups, but also the big social media enterprises like Google or Facebook, which actually they plan also to build new services around the required APIs. So PSD2 can be the start actually of a real digital transformation in the banking industry. So Actually, banking. Sorry. The tendency of banks is to avoid any failure, right? And then you combine it with technological company which grow on failure, right? So when you it's quite crazy when you combine both, like banks and technological company. But putting these two together is crazy, but there are significant benefits for the retail clients and also for the banks if all of this is managed and regulated properly. So actually, the approach taken by PSD2 allows the combination of banking and fintech, so that the commonly present failure of fintechs does not cause any significant harm to the financial industry. The actually the very basic financial services or directly connected to the money stay in the hands of the banks. Only the coordination and data transfers between the services and the client may go through the third party. So, I mean, uh, the money involved stays within the bank, but only the services are extended to the third party. So that's what happens. So it is still safe within the financial institution, the money itself. So PSD2 actually specifies the following participants in the retail financial market regulation, which focuses on uh, this third-party payment services providers or TPP, payment initiation services providers PISP, account information service providers AISP, account servicing payment services providers ASPSP, payment service user or PSU. So what third party payment service providers? These are institutions that have approval or license from a national regulator that they can provide the payment initiation service, account information service, or validation service, and have the liability insurance. So the traditional banks are in this category by definition, since they fall under much stricter regulation. But TPP, take note, can be also another non-banking company or even a small startup if it passes the process of licensing or licensing from the national regulator. Now, payment initiation service providers. These are TPPs which retrieve transactional history from payment account in the client's home bank on the client's request. Account servicing payment service providers ASPSP. These are also traditional banks which provide the customers with payment accounts and payment services. And by definition, payment service user or PSU is just, we call it, the end user or the customers who are using the payment services either directly through the one's bank or indirectly through a TPP. Okay, so this chapter focuses on actually two main services, but actually, there are three services involved, but the third service is just very minor. It just only confirms the availability of funds and only answerable by yes or no. So in this chapter, it focuses only on these two: the payment initiation service and account information service. Now, payment initiation service. So we will first discuss on payment initiation service. So this service is provided also by TPPs, which upon the client's request initiate a payment from the payment account in the client's bank. The payment initiation process illustrated here involves the following steps. No? So a PSU, or the customer, the end user, agrees first with the terms and conditions of a PISP, or the payment initiation service provider. Then the PSU, or the user, mandates the PISP to initialize a payment. Then the PISP communicates the payment order to the PSU's ASPSP. Now, the PSU authorizes the payment to ASPSP. Then the ASPSP executes the payment transaction initiated by the PISP on behalf of the PSU. So that's the overview of the payment initiation service. Actually, this uh, general scheme is not only um, shows the flow, no, it also shows the actual contractual relationships between a TPP and the PSU. So as you can see here, the TPP has no contract, existing contract between the PISP or the TPP. They just agree with the terms and condition. There's no actually a contract between them. Okay. Now going on the account information survey. So this is mainly the purpose of account information survey is to allow aggregation or of one's transaction history from different payment accounts in different banks into one overview provided by a TPP's application. So this is just parang account history of all the transactions. So the account information acquisition illustrated here involves the following steps. No, so again, the PSU, or the user, grants AISP access to the information on his accounts held by one or several ASP, or ito yung mga traditional banks, ASPSPs. For example, for the next 90 days. So lahat ng transactions will be aggregated into one. And then acting on behalf of the PSU, the AISP reports now the financial situation, or the all of the transaction history requested by the PSU. Again, there's no also a contractual relationship between the parties, as you can see also. Now, what is the impact of PSD2? PSD2, sorry, medyo nakabulol siya. Impact of PSD2 on digital transformation of the banking industry. Well, at first sight, it seems that yung PSD2 brings only online access, right, to simple services that have been um, already there for some time. But when looking at it in detail, it not only forces the banks to implement the required APIs, um, but it also forces them to implement the whole necessary infrastructure, right? So that goes along with it. So, for example, authentication and authorization of clients, fraud detection systems, licenses for third parties, and also necessary liability insurances, etc. etc. So, this way, the retail financial market may transform into a new market with services that have not been seen yet. So this figure illustrates what all services that TPPs have available, and it is upon their innovation, um, what kind of new digital services they can provide to their potential clients. So We assume that the result in total can be either small digital evolution or real digital transformation of the retail finance services. So when I say small digital evolution, what are these? What so basically in this chapter, they mentioned about these small digital evolutions, right? So these are parallel payment services, online reinvesting robots for conservative consumers, upgrade of current loan processing. So parallel payment services, these are services well actually are already here. For instance, PayPal, right? So, but they are usually dependent on credit card operators or the payer's bank, internet bank implementation. So, PSD2 offers independence if a TPP fulfills the requirements specified for AISP or PISP. So, these are like the PayPal as we know. Then, online reinvesting robots for conservative consumers. So, this service will be based on moving money from one savings account to another, let's say investment portfolio with conditions provided by the individual. For example, depending on his risk appetite. Now, there are already this reinvesting robots. We called it robo advisory. So sometimes this robo advisory will advise you to invest on this um, product, knowing your risk appetite. So he will advise you on what products available there. So something like that. No, we have this and investment management solutions. They have robo advisories like this. So upgrade of current loan processing. So, upgrade of current loan processing, these are the banks will modify their credit approval processes so that they can take advantage of possible access to transaction data of the application in different banks. So, this allows online credit approval in a short time based on a proper risk based pricing so that the client gets the best rate fitting on his risk profile, or in short, this is what we call straight through processing. So moving on. Okay, question. But what if we extend this to other parties interested in joining in? We will get different interesting business models, right? So what are these parties? So for example, broker as a TPP, social media as a TPP, online retail store as a TPP. So, for example, as a broker as a TPP, if a client would provide one's transaction history through PSD2 APIs to a broker, it would allow the broker not only to do better financial analysis and advisory for the client, but also to provide clients with loans for the lowest price possible. So, in the case of social media as a TPP, so let's say for example, for precise scoring of the client's credit worthiness, right? It is necessary to have information about the client's behavior. Well, the transaction history from payment accounts in one of the most important sources of the client's riskiness evaluation, but not the only one. Um, let's say the banks can check, or what they call it, the credit check. They will know our payment behavior if we have delinquencies in our credit card payments. So all those things but it is only limited within the financial institution. Now, with the information in the social media, because in social media we live, uh, like we call it behavioral tracks, right? So this actually helps as additional information about the client, not just in terms of the financial. For example, in social media, we can see where people normally go, where normally dine in. So all this information combined with his financial informations, um, these banks can now determine or can have a good picture of a client in terms of financial status, financial standing, and his financial behavior because of the social medias. No? So that's just an example. Then, online retail store as a TPP. So online retailers sell their goods not only for the cash, but they also allow their customers to finance their purchase by a loan. So this is done online, and it has to deal with all the difficulties described in the sections above. No, so anyway, a retailer usually has a contract with loan provider, and again, the PSD2 may completely change this. No, example of this online retail store as TPP. If you can see some of shops in the malls selling cell phones or appliances, you can see their home credit, right? Nakita nyo ba yan, home credit? So, anyway, so
Oh,
home credit, di ba, for example, if a client does not have any credit card, and for example, if he wants to purchase the cell phone, an appliance, or appliance, they offer home credit, right? They just need to get some details on the client, even though kahit wala siyang credit card. They can provide him the loan, and the client can now purchase whatever or the cell phone, right? So that's a typical example of online retail store as a TPP. So home credit is their partner. Okay, so now what are the risks and threats to digital transformation in the banking industry? Well, the digital transformation in the retail banking industry is not then mainly about the banks and their ability to implement the technologies and to secure them, but it is about the transformation that has to take place in the hearts and minds of their customers. So, meaning the customers should, what do you call this? Use these innovations or accept these innovations, use this. If not, the parang baliwala lang yung application of new technologies, right? So they need to consider also the customers. So the customers should appreciate these innovations. So in this case, consumer or client, consumers or SMEs, small medium enterprises, have to be able to willing to use all these innovations, right? So the main principle banking is based on is the trust, and it took a long time and endless amount of regulation for the banks to gain the trust of the clients they now possess. And even now, as you can see, some are clients are still suspicious, right? So what is the biggest threat that threatens the digital business? Any answer or guess? What is the biggest threat that threatens the digital business?
Security.
Exactly, security. So it is the loss of trust or any scam, security breach, private data leakage. This may significantly slow down the adaptation process of new technologies or business transformation, or even stop it. Now, these threats come not only from the individual participants, but also from the legislation. Which yung legislation that enabled the innovation, so the legislation or the central bank is also a threat. Any guess why? So the legislation who enabled this innovation is also a threat. Any wild guess? Bakit kaya threat din yung legislation? Any idea?
When their policies are not updated.
Mm-hmm. That's also correct. Okay. Well, I'll give you an example. No,
Losing
why this?
independence.
Sorry,
Losing independence.
losing independence. Yeah, yeah. Well, okay, that's also correct. But I'll give you an example. No, well, the regulation in its pursuit of clients' protection, they have this ability to impose, right? To impose such requirements on the TPPs that sometimes would make the services or the innovation or the application very inconvenient for the customers, right? So once the customers are feel that is inconvenient, they will not embrace this innovation or technology, right? So the digital transformation will be affected. Uh, Naintindihan niyo ba? Tama, no? Did you get? So yung legislation, yung ano nila to improve on the client's protection, sometimes kasi they impose maraming requirements, documentations, and tendency of clients minsan um they stop the application kasi ang daming requirements. Ayaw na nilang sundin. For example, in the internet banking, ang daming requirements. They stop na using the internet banking. So that's why these legislations are also considered threats. Hope you understand.
Yep, all good.
Okay, thank you. Now, on my conclusion part, sorry, excuse me. So, the introduction of PSD2 forces the retail banks to create access to payment accounts through APIs, right? So, this can be accessed by third parties, which are required to have approval from the bank's client and a license from the national regulator. So, this PSD2 allows not only for the clients to be able to control their payment accounts in different banks from one application, but also opens completely new world of possibilities, right? So we can see some innovations already appearing in the form of integrating web and mobile applications, um, or we call it the mobile banking. But the real digital transformation of the retail financial industry in this regulation may bring is still some are still in ideas, um, but based from my experience here in the Philippines, since I'm also working with the BFSI sector, so banking is also the banks right now are more aggressive in a way in terms of adapting to new technologies. Why? Because of this race to financial inclusion. This yung financial inclusion kasi is based on statistics, we have still around 70% of our population who are still unbanked. So that's a huge number, right? So the banks now invest in this what do you call this agency banking applications, so they can reach out to these far flanking areas in the provinces, So most of the unbanked people kasi are in the remote areas, right? So banks now invest on this kind of technologies. There's no more the brick and mortar kind of setup na bank. We call it now agency banking. For example, a person with his mobile, um, the client can transact to that person, the agent, for whatever bank services using only the mobile. So these mobile applications are connected to the core banking system of the existing of the banks through APIs. So that's the current trend right now in the banking industry. No, so the race to financial inclusion. So that's the more a famous term right now in the banking industry. So anyway, so that's for my final conclusion, sir. If you have any question, classmates, please feel free to ask. Thank you.